Hi, I'm Kerry Grinkmeyer with Best of Us in Retirement. I've been retired since 2005. I'm a retired financial advisor. I was a CFP, a CHFC, and a CLU. And I managed other people's money as they approached and moved through retirement. And then actually my biggest part of my practice was in estate planning. And so I recognize that different people have different situations and they approach how they invest their retirement savings differently. And the ideal way is to invest it such that you either spend your last nickel as you spend your last breath, or you end up with a surplus and you pass it on to your heirs, and thus you make the world a better place for those who follow you. I did a video on September the 4th where the subject was the best way to live off of dividends in your portfolio. And I've employed a member of our tribe. Our tribe comes from my other channel, Best of Us Investors, people who come together and we discuss situations on a Discord. And Khalid wrote me and said that he was interested in doing some work with me on developing a portfolio that produced both dividends and growth, and then we created some sort of a spreadsheet to see how, based on what your age is, what your risk tolerance is, and what your financial needs are, how could you build a portfolio that fed those needs over your life expectancy from both dividends and growth, and how you could design that. So we're working on that. And then I thought, well, the other option is that would be structured by people picking the stocks in the categories that they felt were going to be most productive for them. And then I realized, well, there are people who do that for us, and they are investment companies that put together mutual funds or ETFs. And I'm much more prone to go to ETFs because they have usually a lower management fee associated with them than a mutual fund. And you can trade them during the day or anytime the market is open, whereas mutual funds, you get whatever it is worth at 3 or 4 o'clock whenever the market closes. So you don't have the flexibility in a mutual fund. You usually have higher fees associated with, so I like ETFs. So I decided I would do some research and say, what is the atmosphere right now for ETFs that are in or geared towards producing dividends for their holders? And I came up that there are actually 143 U.S. dividend funds available, and they have assets cumulatively of about $281 billion. So that's pretty large. And what they offer you then, depending upon each one of them, is a form of diversification. And that is to say that they are diversifying them over a broad spectrum of asset categories, and thus you lower your risk. But you also then, in my eyes, you limit your return. So I went and did some research and came up with some companies. And what I've discovered is that the companies had, because of the pandemic and the uncertain future, had been hoarding money. And so more and more companies are looking at this money that they have hoarded, and they are saying, well, we can either put it into research and development, we can buy back our shares, or we can increase our dividends. And a substantial number of them are, in fact, increasing their dividends. And we can see that as we look at them. Then we look at what are the highest sectors for ETFs that are paying the best dividends as we look in the future. And much to my surprise, the highest two are information tech and healthcare. And these are two areas that as I look at my structure of a ETF portfolio, they would certainly be in my top 5 as well. I would add to them, though, some REITs, some real estate investment trust, and particularly as we consider the aging population of the baby boomers, some nice climate trailer parks. And there are some ETFs or REITs that do specialize that, not ETFs, but REITs. And so in my portfolio, I would find that. I would put those. I didn't find that in the ETFs that I looked at. And here's a list of the most notable ETFs. And as you'll see on this chart here, the biggest one is ProShares S&P 500 Dividend Aristocrat ETF. Ticker symbol NOBL, with $9 billion in assets invested. They have a 12-month return of 33.7%, which is quite impressive. And they have a yield of 1.9%. So that round that off to 2. So that means that their fund had growth of roughly 31%, and then the dividend yield was roughly 2%. So take that for what it's worth. It's more of a growth fund, and it's invested in S&P 500 stocks, and the S&P 500 has returned quite well. The second one I looked at was a SPDR Russell 1000. Now the Russell 1000 is usually smaller stocks, would be smaller stocks certainly than the S&P 500. They have substantially less assets at $656 million, had a 28% return and a 2.4% yield. And then you get into Invesco's high dividend yield. What that means to me is they're moving into a higher risk area. They have $435 million. They had a 27.9% return and a 6.9% dividend. So they're integrating in probably some bonds and of this nature and some lending activity with some marginal type companies to get that 6.9% yield. Then you have First Trust Index Global National Resources, and this sounds to me like something of a commodities company. 37 million in assets, 26.6 total return, and a 2.8. Again, they made their money off of probably commodities. Then you have a Global X Super Dividend. Again, you can see the numbers, a 7.4. Again, I would believe they're in some securities that are wrapped around interest rate loans to marginal companies. And then you have the Virtus Private Credit, again being private credit, that says they're in the lending business. They had a total return of 52.9 and a yield of 7.1. And then you have the Metris Equity Calculative Dividend Fund, had a 23.7 and a yield of 13.5. When I was in the business, we had a fund at Ameriprise called Extra Income, and what it really was is what we called a junk bond fund. These were people who couldn't go to the bank and get decent interest rates because of their credit rating, and so they had to pay exorbitant interest rates. And there's a lot of that going on right now, and that's how this Metris probably comes up with a 13.5% yield on their funds. That if you choose to go this option and say, yeah, I kind of like those numbers on one of these, I would say, do your due diligence and find out exactly how they're yielding, such as the Metros a 13.5% yield when the Treasury bills are down around 1.25%. You've got to ask yourself the question, how are they doing this and what is the risk involved? Now, as I look at this, I would say I don't want somebody else making these kind of decisions for me, but then I'm a retired financial advisor and I'm comfortable doing my due diligence and doing my input. And I will share that with you as Khalid and I put together this dividend producing portfolio. What I really want to do is then put it on a spreadsheet and give you the ability to plug your numbers in, and that is to say, what is your age, what is your risk tolerance, what is your other income, what are your total expenses, and how much do you need to get out of this dividend growth type portfolio, and what might you expect with the stocks that I will be choosing in that portfolio. As I say, this is a bit of an undertaking because I don't know how to build that spreadsheet, but Khalid does, and he assures me that if he can put 2, 3, 4 days into it, and he can bring it to me. What I'm going to do then is make it available to you so you can plug your numbers in. I'm not quite sure how we're going to do that, if we're going to create a Discord and a Patreon, or you're going to go to a website, but we're working on it because I think this is essential. I can come here and give you all the statistics about how much money the average person has at retirement and how much Social Security you should expect. But the real nuts and bolts of this is, how do I, meaning you and I, survive our retirement, enjoy our retirement, and have it a good part of our life so that we can maintain our standard of living and not have to worry about financial needs. So that involves making a plan and building a way for it to happen. And that takes a little bit of work. It's something that I have the ability to do with the assistance of other people. And what I'm trying to do is build a community of investors on my investment channel and retirees on my retirement channel that work together. You know, let's make this a team sport as opposed to one in which we all have to go it alone. And rather than just look at statistics that really aren't applicable to us, let's create worksheets and spreadsheets that give us a clue as to what will happen if we do this, this, and this with some education behind it. So that's what my Best of Us in Retirement channel is all about. I get a lot of pleasure out of it because I feel I'm helping people learn from what I've learned over the years, and maybe I can make your life a little bit better. So if you want to be a part of it, subscribe to the channel, give me a thumbs up so that YouTube knows that people like this, and that will then push my message out to more people, and that'll satisfy me and that I'm helping more people live a good retirement. Talk to you again soon.